Every working American deserves a secure retirement, but a new law quietly passed and celebrated by Wall Street has changed the rules. Your 401k is no longer just a savings plan, it's a battleground. This video is about transparency, accountability, and protecting what you've earned. Let's break it down clearly, calmly, and without the jargon. Traditionally, 401ks were invested in things like index funds, low cost, diversified, relatively stable. But under this new rule, retirement plans can now include private equity, crypto, and real estate. These are high-risk, high-fee investments usually reserved for wealthy investors. Now they're being packaged into everyday retirement accounts. This shift was made official when President Trump signed an executive order allowing these alternative assets into 401k plans. It was framed as innovation, but for millions of Americans, it may be a dangerous gamble. And the firms managing these assets, they're not required to disclose everything. You might not even know what you're invested in. This law opens the door for Wall Street firms to tap into trillions of dollars in retirement savings. They win big. You take the risk. This isn't about helping you retire better. It's about unlocking your money for Wall Street. Private equity managers, hedge funds, and crypto platforms now have access to your nest egg. These firms charge high fees, operate with little transparency, and prioritize profit over people. Meanwhile, the average American is just trying to build a future, working hard, contributing faithfully, trusting that their 401k will be there when they need it. But now that trust is being tested. Let's talk about the risks. Private equity is opaque. You don't know what you're invested in, how it's valued, or when you can access your money. Crypto is volatile. Real estate is illiquid. And the fees? Hidden, layered, designed to bleed your returns over time. This isn't investing. It's speculation with your future. Imagine working 40 years, only to find your savings tied up in risky bets you never agreed to. This law turns retirement into roulette. And for millions of Americans, there's no safety net if it goes wrong. 401ks weren't built to carry the full weight of retirement. They were a tax-advantaged supplement. In the 1970s, the Revenue Act created the 401k. It was meant to be optional. But by the 1980s and 90s, companies began replacing pensions with 401ks. Why? Because it saved them money. Suddenly, retirement planning was your responsibility, and Wall Street was more than happy to help for a fee. This shift handed retirement security to the markets. And now they want even more control. Private equity sounds sophisticated, but here's what it often means. Buying companies, loading them with debt, cutting jobs, extracting profits. Toys R Us, Payless Shoes, hospital chains. The pattern repeats. Now imagine your retirement savings funding that cycle. Private equity firms aren't required to disclose everything. Their valuations are internal. Their strategies are aggressive. And their fees? Often buried in layers of complexity. Crypto and real estate aren't inherently bad, but they're volatile, opaque, and unpredictable. That's not what retirement accounts are built for. Crypto can swing 30% in a day. Real estate markets crash. These assets are better suited for high-risk investors who can afford to lose. But when they're bundled into your 401k, you're taking on risk without even knowing it. And if things go south, it's your future on the line. We're wired to trust authority, to avoid discomfort, to delay hard decisions. That's exactly what Wall Street counts on. Most people never read their 401k statement. And even if they do, they don't know what to look for. Status quo bias, fear of making the wrong move, financial inertia. These are psychological traps, and Wall Street exploits every one of them. You've been told to save $1 million, but what does that actually mean? Let's run the numbers. Cost of living, healthcare, inflation, market volatility. The truth? Most people are underprepared, and the system doesn't help. This wasn't an accident. It was a coordinated effort by lobbyists, asset managers, and lawmakers who benefit from the system. Let's look at the timeline. Let's name the players. Let's follow the money, because if we don't know who's behind the curtain, we'll never understand the show. Let's hear from the people living this reality. Retirees with depleted accounts. Workers confused by sudden plan changes. Union leaders demanding transparency. This isn't just policy, it's personal. The 401k isn't the only option. Let's explore Roth IRAs, solo 401ks, low-fee index funds, cooperative pension models. You deserve choices. You deserve clarity. You deserve security. This isn't just about protecting your account. It's about protecting your neighbors, your coworkers, your future. Here's how to take action. Contact your representatives. Join financial justice coalitions. Share resources. Start conversations. Because silence is complicity, and we're done being silent. Retirement should be a promise, not a gamble. You've worked hard, you've earned your future, and you deserve a system that protects it. This law may be legal, but that doesn't make it right. We need accountability, we need transparency, and we need to speak up. Share this video, drop a comment, subscribe for more truth about your money and your future. Let's build a community that fights for financial justice. Let's protect what we've earned, and let's make sure no one gets left behind. This is just the beginning.